Good morning, everybody. Thank you for your time. And what we hope to do is to take the next 45 minutes to show you Forecast 5, which is our budgeting tool that we've written and developed in New Zealand. And what we're doing here is just showing you specifically how we can approach the whole budget process and how we can make what has become probably a really significant chore, a very simple job to do and easy to maintain, and all that through using a purpose-built software. So we'll just quickly run through the traditional PowerPoint just to get you set the scene. And what we're here, this is the process around the budget. So the purpose of the budget and subsequent forecasting is to support decisions. So it enables the allocation of resources in accordance with policies and targets. So what we're trying to do there is be able to make sure that when we present that budget, the information is correct. So generally we're dealing with an ongoing current problem of everybody is running this in Excel. And you may not really appreciate it, but I'm sure you've experienced the frustration and the time-consuming effort trying to make that Excel sheet work or balance in that. And there is a range of research in that released out of the Hawaiian University. Edward Pranko talks about error rates and like that. And there's a significant amount of errors that arise in the spreadsheet. And there's also a whole range of functionality issues. Nothing is there. It is a complete blank sheet. And though it seems simple, it's very slapdash in that. And that's what the the Forbes article on the most dangerous software is, just the sheer number of mistakes. There's an interesting EU committee dedicated in reporting spreadsheet errors, which is quite interesting. So there's no reports, no cash flow, no balance sheet, no actuals, no extent, nothing. So you're really doing that. And I mean, having looked heavily through the Kiwi Park model that's presented, it is quite complex what it achieves. The outputs is a format they're looking for, and what we can hopefully show you is how we can get some of that data ready for you in a much easier way. Now, highlighting just a report from Aberdeen Group, spreadsheets, the biggest users, the biggest issues people face. So version control, who was working on it last, the whole area around manual input and the lack of security. So and then the underlying fact that the formats can be changed or broken, the links are changed and varied, and people just struggle to make those numbers there. So where do we get to? Forecast 5. So let's just highlight, first partly, it's a purpose-built budgeting solution. Budgets and forecasts, every budget is a forecast, but not every forecast is a budget. And there is this unique industry structure around the fact that budgeting is determining now, a point of position from now to a place in time, and forecasting is constant refinement of that budget. As information progresses, as time progresses, you can get more accurate. We've got a range of things that make preparing the budget simple and accurate, but we also have some features around our one-touch reporting, which make it very easy. Now, though we're saying Excel is not the ideal model, we then use Excel for a lot of our advanced reporting. So we also do the budget comprehensively. And so what we're talking about there is a profit and loss or income and expenditure, but also capital expenditure, the balance sheet fully. So we go a complete solution. And what we're talking about there, and from the structure of a profit and loss and the balance sheet, and these both interlink into the cash flow and the funds flow report. And without the funds flow report, you cannot confirm and validate that your model is complete. And what I mean by that is cash flow and funds flow talk about the movement of money. And one tells you where the bank account will be, and the funds flow tells you the movement in cash. And they're very much an integral part of providing an accurate solution. All right, so that's just setting what we do. How do we go around it? Well, we can categorically state we're 10 times faster than spreadsheets, if not a lot faster than that, especially when it comes to multi-year or the 5-year plan or a 10-year development plan. We're error-free, we're automated reporting, error-free and automated, so we allow these things to do there. So we allow you to create multiple budgets. And what it means is that we can actually use a function called consolidation to add the departmental budgets into the group budget and the capital expenditure budget, or we can complete them in one budget. We can do student-based revenue, so we can use KPI budgeting, number of students, the rate that's going to be paid to calculate your expected revenue. We can plan and record capital investment, capital expenditure, new classrooms, new gyms, or similar like that. Sort of simple features, wages records by staff member. So we can have, we'll show all of these there. Multiple bank accounts, moving funds into the deposit account, a balance sheet, a cash flow, and actuals. And we meet the 15 years, up to our 15 years for that, but predominantly we're focusing within this sector, obviously within the 5-year plan and the 10-year rolling forecast, which we can help you prepare in a very simplistic manner and make it very easy to maintain that on an ongoing basis. We also provide consolidation, so your departments can be isolated, subject to the size of your school, and therefore work out how to prepare the budget in the most economical way. And we have, in a way, there also allocation capability to the departmental heads to update their budgets if you wish to progress down that level. All right, so we move into the process that we implement. Okay, so just within a budget, we establish parameters and settings. We then build, import. So we can bring in or import all of your existing spreadsheets if they're the case, if you wish to do it that way, and then build upon that, providing a base thing that's using historical data. Or we have integration into various financial products such as Xero, MYOB, where we can read the historical data into Forecast 5 and use that as a base of going forward. And that is a couple of options in there that make it very simple to create. We can then enter the opening balances and the data, that structure that goes with it. So we bring in your opening balance sheet, your opening fixed assets, depreciate those, as well as your opening bank balances, and use those to go forward. Provide your reporting, and then we move into a process which may or may not be applicable, but if you're stronger, you're structured, you might want to review the actuals or enter or integrate or import the actuals and analyze variances. And that's key within what we're trying to do is understanding the variance between expectation and actual and how that impacts on the decisions. So the timing is a very critical matter that we address, the timing of cash. Okay, we can create revised projections, so we can take rolling forecasts and move them as the year goes on. Additionally, add into that the options to reforecast based on different roll numbers on a monthly and an annual basis or quarterly as needed. We can then report against both budgets, the original budget and the revised budget. We allow consolidation, and then we have a very, very simple process of extending it into future years. And that means you can take the model and reuse it time and time again going forward. And the key point is relying on the accuracy within the model to give you the correct figures. All right, some of the things that we're working with in school-specific areas: capital works, next year's budget, reforecasting mid-year, making it accurate and easy. And that's taking away the constant refinement and working on the Excel spreadsheet. So really what we're trying to say is you can work on your budget, not in it. So we're right now, everything being good, we should be able to move into our product demonstration. So I'll just exit from this. And bring in Forecast 5. Right, so we've got a model, so a couple of sample models. I'm not going to go into extreme detail. We have a login structure and we present the models that we have. So we have functionality around looking at the school's model, and we'll use that as an example, but at the same time, I'm going to just bring up the 5-year plan and open that so we can support multiple budgets open at the same time. All right. So what we've done here is basically brought in the schools park outline structure or the financial reporting structure and brought them into what we call a record list. So this is exactly what you've already seen. And we've grouped all these in replication. Now, just outlining our layout, this is the model name. These are sales sections. So when we click on the government grants there, we determine them as sales, which tells our system that it's going to be a revenue-based item. And we can group and subgroup as many of these as needed to. So we have many sections to group in, and we can subgroup those within folders. The menu layout, across the top, we've got our functions. So we've got our data editing, moving data, departments, which is something we can look at. So international students, the olive arrow there, it tells me that it's a department, and within that department, we've got sales and cost of goods sold, or expenses that go direct expenses. So we can report that as a trading account, or we can complete it as a separate forecast and consolidate. Our settings, sorry, consolidations in our settings, opening balances, actuals, and then we do have a what if scenario. All right, so we're just going to go briefly through the settings. And in these settings, obviously, we can determine the start date and the length of the forecast. We support currency, we support differential GST rates, and we can add as many of those as you need. And the process behind these is the fact that we can, once defined, we don't have to calculate anything. Forecast 5 will do those calculations for you. Okay, profiles. I am using a school profile we defined, which is just to get a proportionality. It's a spread code we'll do there. Payroll tables have been defined. We redefine those and they're available in the system because we automatically calculate the PAYE and KiwiSaver calculations as part of the process. And then there's just some settings around default parameters and other preferences that we may define. So we've got a range of these and we can go okay, and that allows us. So just starting at the top, the model description here. At any point of time, I can simply go show refresh. And we'll be presented with a snapshot of the data in the system: total revenue, cost of goods sold, expenses, net profit, and down the balance sheet there. We can see our bank accounts, our total debtors, and whatever records, which is what we work with. Records here, all of the green items are records, are brought into the model. Right, so within a section, I can display the data that's within the section that has values. So we can see inside here that we've got operational grants, and we've set it up as an accrued and prepaid income. So just from a top level visibility, we can drill down on these individually, or we've got these all sitting over here to be clicked on and moved back for. So if I click on operational grants here, the system moves down in there. And what I want to just highlight is a couple of things we've done to make this one calculate. So we set it up as an accrued prepaid record, and it's a prepayment because we receive the sums in quarterly. And it's just a way to model to show what we're doing with the fact. So we're prepaying a quarter of revenue, and that is then going into an accrual, and then is being received into our cash and our bank based on the invoices being raised. This record itself, this operational grants, has been calculated out of MYOBs, a percentage of MYOBs. And the MYOBs are our KPI budgeting, and I will show you how we've structured these just to give you the idea of the whole model being built. Students 9 to 10, that probably should just say 9 at the stage. Now, we've budgeted to have 300 a month starting from February. And we've done the same with year 10. So obviously you can replicate and roll this right out to all of the different student grades and levels you've got. We've then determined the government grant per student grade. And based on the annual total, we've just plotted it in there. And what I've done now is to make this model work, I've put in my grant revenue. I've used the formula type, and it's simply student 9 times the government grant for 9. All right, so we're able to select any record within this formula that's within the model, or add any numbers or operands we need, but we're just going to go students grants, and that figure there. So what that means is that 2.1 million, I can literally in a flash go 350 here, 350 there, and my grant revenue immediately changes to reflect that total. What I've then done, because MYOBs are non-financial or statistical KPI record types in the system, I've then introduced that as operational grants by a record type called percentage of MYOB, and selected those two, which brings it into the model. So the beauty of this is we can just simply have all of the structure built, and it becomes very easy to maintain your student numbers as they come, as you budget for them, or as you expect to it. Teachers' salary grants, I've modeled that as a percentage of our salaries, I guess is the way to look at it. And we've ticked those, and we've just done this as a percentage of wages. So the grants technically are a percentage of wages, whether it's 100 or 110% is just what you would enter there. But let me show you how we've created the employee benefits salaries. So there are a few of those in this model, so I can just type that as a search function. Only plenary salaries wages. Oops. And that's just down here under our direct cost sections. Now with wages, there's a unique record type called wages and gross wages. So we separate the PAYE and the gross wages component because of the cash flow impact. Because your PAYE generally might be paying twice a month or in monthly in arrears, depending on the structure. We also have different types of ways we can do salaries. We can do them as profile, which is put in the gross annual salary and spread it. Or more commonly and prevalent, we use employee entry. And this is a method of individually or group-wise creating employees or teachers in that, entering them in the system and grossing them up. And so we're able to do is one, here is a teacher grade 1, we've got 20 teachers there, their salary is this, it's an annual salary. We can also see that they've been had start and finish dates, and we've got KiwiSaver percentages and things like that. All right, so we can automatically do that. And obviously we can grade or bring down as many grades and functions as we want. If we decide that we've got 22, we can bring that in there. If we wanted to add, we can add either an individual, or we can do temporary staff, and we might say from the start date, April 18 to June 18, we've got a weekly rate of $1,200 for 3 temporary staff. All right, so the 3 months only shows there, you'll see that we've automatically calculated the PAYE that goes with that person, that staff member, and we might not put them on KiwiSaver, or we might, depending on how you want to do that. Now this can be done as an individual temp, 1, or as many as you need, or you can create as many additional record types as record details within the employee groups. And the key with this is we're handling the PAYE. So obviously we can have, if we needed to, more records simply by adding records here. We can increase those and analyze there. We could create a department, and that department could be just for the salary costs and bring it in that there. It depends on what your model needs and how you need to build it. All right, so we can then obviously keep creating as many record types as we need. So if we look in there, and we haven't populated much of this data, but we've got income here, revenue, which is this record, and we've just gone from a manual entry style here. So we've just manually entered a figure to say this is the money that's coming in. We support another range of records, which is percentage of sales, copies and all that, and they're all designed just to take a calculation away. The key component that we're doing in here is handling the cash profile as well. So with cash and profit and loss, we're talking about timing differences, and we're allowed to model whether we're going to do it a number of days. So if we move this to 31 days, this payment will move back a month. If we move it to 0 days, all payments will happen in the same month. You'll notice we're automatically adding GST to these totals, automatically handling that equation around GST. We also have other techniques such as payment profiles, which are ways of just saying a percentage is received each month and all that sort of thing. All right. Now just moving down, and you can see here we've grouped international students, and we can set up those as MYOBs and drivers and their costs that go with it. Obviously within hostel fees, the obvious thing in that is that the GST rate is not the full rate, so we'll change that to be okay. And I'm not sure exactly what it is on schools, but I know what it is retirement homes. Well, I do. And then very quickly, this now is sitting at the hostels rate. So we add $1,000, and we see the 11.5% has been added. So we're handling that automatically and very simply. Once it's established, every record now can have those sort of expenditure coming in there. Further down, we can bring in all our other expenses that match and we need in the model. Now, I'm going to move past all the profit and loss records. I'm going to get down to one thing we call the main bank account. And what this is now going to do is do what we call a system record recalc. And this is when we recalculate all of the balances to make sure they're correct. And these balances include debtors, creditors, GST, PAYE, tax if it's applicable, which is not, and interest calculations that go with it. Now, we can add as many bank accounts as we need. And when adding those, we can then move money back and forth between them. So we can move up call accounts, trust accounts, savings accounts. All right, so those are there. Now let's just look at the settings there. We've got an overdraft interest rate. We've got a credit interest rate here. The key factor is we're now into detail of your expected cash flow for this bank account. So what you're now in is a position to discuss your moving balance and liquidity ratios with a lot more comfort and accuracy than you would have been before, because we're doing this calculations. All right, and if I wanted to bring this into a call account, and we'll just set it up here. So I'll just call this a call. And they can be separate funds for everything. If I stuck the space in there, and I can bring out surplus funds in here, and we can earn 3% on that, and that can be credited or whatever. So we manage all that. Now moving into fixed assets. So building the model, as I said, we do a comprehensive and complete balance sheet. So we've got our land, we've got our buildings. And if we entered our buildings with an opening balance and the opening depreciation rate, we've down here have got a calculation for the depreciation that will apply. That's the case. And inside this record, under here, we can say we're spending more money on them. So we're now budgeting our capital expenditure in this model. So you have various areas there, information and communication technology, all of those things that we can budget the expenditure. We can also handle the disposal. So we sold for $5,000 worth of assets. We made a gain, and that calculates the net book value depreciation there. So it's simple as this. We'll see here the depreciation going up as well as reducing as the rate's there. So we can change those rates and we can change those methods. All of these very straightforward and simple. Right, so we have as many types of fixed assets. We also have the ability to literally add new records and do financed assets or leased assets. That comes up. All right. We also have borrowings, and we structure these loans and make those calculations go away for you. So I've built this new loan, borrowing due in 1 year. It's a calculated loan taken. It's compound interest, January 18th when we're going to get it. It's a 9-month loan. There's $100,000 and an interest rate of 3.5%. Our repayments are $11,000 a month. Immediately, we've calculated the interest, we've calculated the capital repayment, and we've grossed and moved the calculated the loan balance as it goes through. Equally beyond 1 year, exactly the same features, but we move it out to 36 months. And this one, because it's not you, will sit in the balance sheet as an opening balance, our repayments. Okay, just rolling down there. We have an area for other assets and liabilities. Because we handle the bank, the fixed assets, the term loans, accruals, prepayments, all of those things are handled. You're left with this list of other assets and records that you might want to include. And they're all built from this screen here, and you can add them as you need. And there's just a range of types of these records. So other creditor, debtor, long-term liability. Finally, we come down into a capital accounts area. And these are just reserves, and they can be anything from reserves to capital changes and the equity brought forward. We saw earlier memos, so we can bring in as many memos we want, and there is a lot of things we can do within the memo functionality. So to give you some ideas, we support in these memos things like days per period, units, number of employees. So literally we can go click and there, and we can see that we've got this number of employees total each month, 85 employees. I can then use an employee formula record to create staff number per student. So we could build things like number of students simply by adding a record. Total roll. Change this here to a formula. Click on the formula tab, and I just go and add students 9 plus the student 10, and we've got our total roll. We can see it change, and I'm going to print it on the reports after the P&L. All right, and then further down the bottom here, we have what we call our forecast records. There is also an assumptions section where you can record the assumptions, etc., that are built up around the model. Okay. So very briefly, we've given you a quick overview of the structure of what we do. Now let's just look at with what we've done here, our reports. So I'm going to the reports. We're just going to we do a recalculation check. So we run up the balances are all right. You can see that before we move into the reporting. All right, so first up, show all on my profit and loss report. You see all four of them have run now, they're all visible. We can see our profit and loss, or our income and expenditure. We can see our direct costs. We can see all the way down to our depreciation, interest expense, and our surpluses or profits before tax. We have a cash flow report, which has been produced instantly. And that gives us our receipts, operational grants, international student fees, GST, borrowings due in 1 year coming in as we receipt that in, employee benefits, PAYE going out through to our GST, PAYE payments, leading to our closing bank position. And that's by month. So we can see here in June, we got into overdraft, we come back in surplus because of the grants received, etc. And obviously we've got our balance sheet. And so that gives us our assets, our liabilities, and that maps each of that to the reporting structure down to our balanced balance sheet. And then the final standard report is our funds flow report, which shows the movement, source and application, the movement of funds throughout the balance sheet records. Trade debtors went down, our in cash working capital changes, our cash inflow, our investing activities. So we've built a new classroom, and you'll see here total cash inflow minus 405, and we see on our cash flow exactly the same figure. That tells me our model's balanced, and it tells me I can rely on these information being correct before we make any decisions about what we want to change or anything like that. It's important to see that those figures combine and tell you that. Without that, you don't get capital expenditure. If you leave something out and it doesn't balance, then you're not going to be able to have the funds. All right, so we can look at those sort of things. Other things we've done, we have what's called one-touch reporting. Now, this is a very nice set of features where what we can do is select an Excel spreadsheet as a template. We've got our profit and loss balance sheet, funds flow, assumptions, and our fixed asset schedule. And we can put out any other schedules like our employee schedule. And we can run those reports. And what that's going to do is load those up into Excel and allow us to then print those reports all similar. And it just takes a wee while because we're now running something like 6 reports. Now that's a multi-year feature, and it also will run the variance reports. And that's allowed you to present a client or board quality report. Do we want to open the worksheet? Yes. Okay, we're just loading Excel. All right, now if we'd set up this model like I have done here, I've got a cover, I've got a contents, a disclaimer, company profile, and these are all just that were inside that template. Now I've got my profit and loss, balance sheet, cash flow, funds flow, fixed asset schedule, assumptions report. So that's talking about our assumptions with students, those sort of things. Our employee schedule. So these are the individual employees or the employee schedule that we have, and our wages, totals, and things like that. The key feature around this is you literally go to the print preview. You can select the entire workbook. You can print that to a PDF or a printer as you may wish. And we've now got the entire reporting package sitting inside a PDF that we can then circulate. And you'll see when I come down here, just a little bit further, we've got our balance sheet all fitted on the one page. It will go down into the second page if it needs to, but all 12 columns sit on that. And that is a very powerful, simple output that anybody can be circulated to. Right, now that has been renamed. So it's been given the name of our forecast and it sits inside of that. So we'll just close that down and we'll come back, save, come back in here. Okay, so just to finalize up a little bit of things like that, having done one model, We have a couple of variations if we wanted to do it all in one single model, but we can actually do something like this. I've got here a departmental model, maths department or similar, where we might just budget the individual maths department, their learning resources, departmental salaries. And then if we have several of those, we have a functionality which is called consolidation. That allows us to add each of these. And there's a couple of rules, so it's got to be at the right start date. So we need to take this back to January 18, and then they can be added. But you can see here, we can see that all of these are there. We could add these all together. Just check that was right. We go OK. And the consolidation feature would take all of your departments, consolidate them into the school budget. And you'll see here I have got a 5-year plan. And I can do something along that, which is more specifically like such as the capital expenditure and growth. So our consolidation. So I'll just rename this to give it a name. Right, so we do that. Click in there, the name comes across. All right, and so I'll just do close, show the difference here. We go to reopen, the schools consolidation sits here as a consolidation type. We open it up, you'll notice it brings that all pretty quickly. All right, so we're therefore looking at our operational grants. We've got a grand total of that. And along here, you'll see the 3 source forecasts. And so I can look at each of those and see what they contributed. So this one contributed 50,000 a month. This one put in the other 498,000, and the Kiwi Park model itself did nothing. So obviously we have all our normal reporting, all our visuals, all our structure that goes around that, including the one-touch report. So we can actually produce a profit and loss that is consolidated for the entire group, the entire school in that case. And you can see all of that, including the whole cash flow. Another variation on this and the way you can use the tools is I created a 5-year plan. And I did the same thing. I used a formula record, but you can now see 5 years of data right across this. We used a formula that is based on base rate times the number of square meters. There are 2 memos. So down in here, here's our base rate, 30. Go back to year 1, we did 30. I factored in a change, an increase, something like that. And then our square meters, 15,000 or whatever. So we could say we have 18,000 at this point. So we can update any of the fields that we want. We go to 21, we'll put that all at 80,000. Right. The way this model is generated, it was built to have a main bank account receiving the generals, and then we've got a classroom fund. And the idea of the classroom fund is we're putting away the funding for future expenditure. But at the same time, I've also budgeted the technology assets and the furniture and equipment to be spent each month or each year, as the case may be. So if I just look straight at the reporting here, let's show all. Right, and I'm going to just rerun the cash flow individually for the main bank account. And again, for the classroom fund, just to give you an idea. Okay, so just walking backwards very simply, profit and loss. You're now looking at 5 individual years, but we do have some driver options here where we can flick this to go annually, and we can look at it year by year or year on year. We can see the grants increasing and a big jump when we increase that. We can see our R&M, our insurance contingency, or whatever we want to put in there, depreciation on assets, and operating surplus, as you want to call there, interest expense, and our net profit that leads all surplus from that. Our cash flow, as the combined, just gives us the total figures. We'll run these all in annual, so they'll be just look at easier. I can also deliver them as quarterly reports, but this is just simple, easy to see. So we can see a closing bank account, and that's because on our balance sheet, we've got $150,000. We'll change that again to annually over the 5 years. We're expending and increasing on our technology. We're expending in furniture and equipment. They're being depreciated, as the case may be. The classroom fund shows up, and We just go back to the monthly. We should have had on here the classroom. We start to build a classroom block that we might start building late 2021, 22. We see those here in the expenditure in total. We can see that in the funds flow. And then the other component of what I'll do is show you the cash flow of that funds. So this is the rebuild grant coming in, the classroom fund, interest, and our fund being used and transferred in and out. And the same with the main bank account on an annual basis. We can see the movements of the expenditure and the grants that are going on. So that just gives you ability for what the product does, and you'll notice at no time am I having to worry about the figures, calculations, or anything like that. So that alone gives you the understanding about what we get for this, is to make it very simple and easy. A couple of little options when we start to actuals, we start to import actuals, and we can do that through import, manual entry, or integration to Xero or similar. So the actual process allows us to now, for example, put in the actual numbers that happened and then report variance reports. Right. It also allows us, so we'll just say we've got 525,000, we'll just load that manually, say okay. We do the balance sheet actuals as well, month by month. Right, so that's going to do there. And the other process we provide at this point is rolling forecasting and reforecasting. So if we were in the students, we could actually put in the actual numbers of students and record the effect that has on our revenue. We just wait for that to come through. Okay. So as said there, if there's any questions, feel free to put them through there. We will unmute you at the end of the show and bring you in and open it up for a discussion forum if we're happy to do that. If there's anything you want to see, just take a note there. Right, and so with our actuals now, we pick up our first month. We see that it's bolded. We've got our actual figure there. We produce a range of variance reports. So our profit and loss variance report, cash flow variance report, which is a very valuable report. So we can actually see in here, P&L, the actual, the budget, variance, percentage, and on a year-to-date basis. So it's a month and a year-to-date. And on the cash flow variance report, we budgeted nothing. We actually got 86,000. That's a derivative from the calculations. We received more revenue. I didn't change the debtors as such, so it was obviously treated as banking. Leads us to our GST, leads us to our net cash flow, and obviously that. So we allow all of those features. And one of the nice things we do is you might run 11 months off or 12 months on, and what you can do is take a copy of the forecast. You can go to Reset to No Actuals, and we give you a facility to keep your actuals as your budget next year. So I say yes to that. So my actuals, if I'd entered for the 12 months or 11 months or whatever, are now set as a budget. I now open this up and I say extend it to 6 years. And I can factor a 5% increase on the revenue. I can go okay. We now get 2022 and 2023. All right, and so we've used this to produce that information, and we now have 6 years of forecast, so it becomes very forward on that. And we then allow you, in effect, to delete the first year, so you've got a moving 5-year forecast. And that can become very simple to maintain because the information is the same. Right. So that sort of finishes a sort of quick snapshot. The ability for us from this process to, or for you as users, you can actually select any forecasts from the main menu here, and I can do things like copy that forecast. Copy no values gives me a blank forecast with all of the records there, but no record values, so you can then start afresh. We've got delete and obviously maintenance, export and import to send it to us and support there. All right, so with that, just bring you to the end. I'll just run the last couple of slides. through and everything there. So in the recap, we do things like from the Xero budget, fast one-touch reporting. It is very, very comprehensive and very effective, and people really like what it does because you then can do some additional graph, add your information, but it's also quite quality. We do the budgets, we do the actuals, and we do the rolling forecast. We do the monthly analysis. We can do the analysis and comparisons month on month, things like that. And the reporting is all completed, right? So we've said that a little bit, but we've also got a range of additional schedules, and it's used across the range for anything else that you might want. So mainly getting your budget and funding requirements, including your capital expenditure planning, monitoring your ongoing results in the board's reports, cash flow and budgets there. All right, so we've got a range of people. So there's some few of the people that we've dealt with. Judith at Westlake Boys. She has been instrumental in driving us into this market a little bit more. So they were able to budget their loans and funding. One of the financial controllers, Van Ash Deaf Centre, uses it and has done for several years. He makes good statements, very effective for him to bring those planning together. All right. We actually have a case study on that to give you an idea. Revenue 15 million. You can grab that case study off our website. He was very complex because he's budgeting for all 7 of their schools. Ever-changing environment. And yeah, he'd been cross forecast 5, so it didn't really make a big difference. But when we went down there and talked with Matthew and sat down, did the consolidations, and then he's integrating that to Xero, he's finding the whole thing's coming very easy.